You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phone. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Steve? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. Is the daily broadcast of indeterminate length where we discuss all E-mini along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk, Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday, 6th day of August, 2019. Thanks so much for joining us, whoever you are, wherever you are. We're just glad to have you right here, right now. And hopefully we'll make it through this broadcast without any of the issues we experienced this morning during the special report. Platform crashed twice. John had microphone problems. Seemed like a Monday. I checked the calendar. It's Tuesday, and so here we are. Now, I have a chart up of the S&P 500 E-mini Futures. If you cannot see the chart, go to our homepage at cfrn.net. On the right-hand side, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. Now, I'm going to go straight to the numbers, and then Michael will be in to give us a recap of what happened this morning in the live trading room. Starting here in the U.S., the Dow up 103 points, NASDAQ up 43, S&P 500 up 12, the Russell 2000 down less than a point. In the commodity basket, crude oil down 18 cents, trading 54.51 last. Gold up $4.90, trading 14.8140 last. In the Asian markets, at the close, the Nikkei was down 134, Shanghai was down 43, the Hang Seng down 175. And in the European markets at the close, FTSE posted a loss of 62, DAX was down 90, and the CAC down 7. That makes it a red day in Asia, red day in the UK, and because of the Russell, it's a mixed day so far here in the US of A. Let's go to Michael, get a recap of what happened in the training room this morning, and then I'll be back. And we'll continue that discussion we tried to start this morning with John. Michael, take it away.
Okay, I got it. Here we go. Bring that over. And there we go. You guys should be looking at my screens.
We got it.
Okay. All right. Then I got this. Good afternoon, everyone. Today is Tuesday, the 6th day of August, 2019. And if you have not taken a free trial with us and you want to take a free trial with us, there's a couple of ways to do it. One is to go to the homepage at CFRN.net. And over here in the right-hand column, it says 5-day free trial, apply.cfrn.net. If you click on that, you will then be brought to this page. And you can go directly to this page if you want to, eminitrainingschool.com. On this page, all we need you to do is put in your name, your email, your phone number, and you can tell us your biggest trading challenge so we can tailor the one-on-one training specifically to you. Hit the send button and you'll be sent all the information you need to get into the live training room. Okay? Now, the spreadsheet. If you're going to read the spreadsheet, excuse me. Okay, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today, as I said, is the 6th day of August 2019. Today, we made 1 tick in the euro, 15 ticks in crude, and 12 ticks on the ES. That put us at 306.25, sorry, on the morning session. And today, it took 17 minutes and 2 trades to get to the goal for the day. At that point, we're up $100 per contract, and we only took a total of 5 trades today because I did a lot of talking and less trading, but I'll go through everything in just a minute. So on the month now, we're only 4 days into the month, but we're up $1,068. That's averaging $267 per day so far. On the year, we're up 18,620. That's over 139 days, averaging 133 per day. That is 1 contract, 2 hours per day. And as you will now see, I missed a whole bunch of trades. And yesterday, good Lord, yesterday, crude oil was all over the place. And it seemed like everything worked on crude yesterday. All right, well, with gold, now I'm scrolling back. We didn't do anything with gold. Oh, well, we did. We had 1 break even right here. Our first trade of the day, I think. Yeah, it was. And we had a break-even trade on that one. It did change directions and start going the other way. But right here, you see we weren't trending. We didn't have a good trend right here. We had flat tops. So we couldn't do anything right in there. And then the slingshot got all messed up. Gold started a nice uptrend. But because of the way that it reacted back here, we weren't able to take advantage of any of it. And let's see what happened during the break. During the break, we had a nice downtrend, and there was a shorting opportunity right there. Another one right there. Another one right there. And one more right there. Okay. And so we ended break even on gold. On the euro, no. In the pre-market, the euro had some really good movement. But once the markets opened up, it was kind of flat. It moved up and then it just went sideways for a while. Once it broke out of that, we took a momentum long trade right in here, and we ended up with 1 tick in profit on that. There was another momentum long trade right here that I didn't do that would have given something. And then it's just been flat since then. But the euro usually does flatten out after 11:30 a.m. Eastern. Hang on. My charts just froze up. There they go. Okay, we're back. All right, so crude oil. Crude is my favorite market. Our first trade on crude, this is where we got the goal for the day. It was right here. Okay, we picked up 10 ticks on that one. And then I was answering an email when this happened right here. And the cycle was going up kind of steep right there. So it's a questionable trade to begin with. The MA1's going straight up at you, and the cycle's going up pretty steep. So it's questionable whether that should have been a trade at all. Over here, we picked up another 5 ticks, and right here, we missed a trade. Okay, then there was something that Bart was asking about. Yeah, over here at 11:14. I had stepped away for a few minutes, and there was a shorting opportunity there and there. And then this is all during the break now, but there was a shorting opportunity off. What the heck? There was a shorting opportunity off the BBC right there. And another one right here. Then changed directions, and it tried to go long right here. I mean, it did eventually go. It's still not putting in a higher swing. What you want to see it do right here is you want to see it. Come on. This has been bugging me all day. And why does my 6E keep coming up? I'm just going to minimize that. There. You want to see it. You want to see it get up above that level right there. Okay. That's what you want. And that was crude oil today. We ended with plus 15 ticks on crude. On the ES, now we had a bunch of new people in the room today, so I did a lot of talking and not as much trading. But there was some good opportunity on the ES today. Okay, I'm scrolling back to the beginning of the session. See, that was horrible right there. Okay, here we go. On the ES, we started out with a long opportunity right here. You have to keep in mind the high of the day was hovering right up above us most of the day. There was a shorting opportunity right there that we missed. And a long here that we missed, a long here that we missed. Now, the reason they were long opportunities or buying opportunities is because we had to close above the trend line. Okay, close above the trend line. Down here in the slingshot, the cycle is above the green line. Okay, then over here, it started going short on us. After the 10 o'clock news, Jolt's job openings, I think is what it was. There was a shorting opportunity there. And another one right there. And then it tried to flip around, but it just got sideways in here. And finally it did, a half hour later. And it gave a couple of long opportunities, both which could have been profitable. Another long opportunity right here. That would have been a break even. Long here and a long there. That would have been profitable. Then I finally got into a trade right here. I picked up 12 ticks on it. And then while I was writing down that I picked up 12 ticks in my log, I missed another one right there where I probably could have got another 12 ticks. And you can see I was drawing trend lines everywhere. There was a shorting opportunity here, a shorting opportunity here, and a shorting opportunity here and here. And why was that a shorting opportunity, you might ask, right? Because it would have been a close below the trend line that you don't see me having drawn. Right there. Okay, so there's a lot of money left on the table there. But I was trying to do a lot of training this morning and talking people through stuff. Hold on. I'm trying to draw another trend line right now. But there was a shorting opportunity here. There was a shorting opportunity there. And another one right here. Then it switched directions and you had to bounce off the BBC right here for that leg up. This is all during the break now. Another one right here for that leg up. Then it switched directions and you had that for the leg down. And that was it. So there was a ton of opportunity on the ES this morning. And now, hang on, let me bring my 6E back up. There it is. I don't know why that kept popping up in front. But, all right. Back to the spreadsheet. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 6th day of August 2019. We had 1 tick on the euro, 15 ticks on crude, and 12 ticks on the ES. That put us at 306.25 on the morning session. Today it took 17 minutes and 2 trades to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 5 trades. So on the month now, we're only 4 days in, but we're at $1,068. That's averaging $267 per day. On the year, we're at $18,620. That's over 139 days, averaging $133 per day. Now, when we started out the month, we started out with $10 on the first day. So you can see how these averages, you know, they fluctuate pretty well, you know, going to the upside anyway. You know, we went from an average of $10 a day to an average of 100, probably 150 or 175, then we're up to 267 now. If you have not taken the free trial, go to the homepage at CFRN.net, not com, .net. And over here in the right-hand column, it says 5-day free trial, apply.cfrn.net. Click on that, and you'll be brought to this page, eminitrainingschool.com. And scroll down, and down here, all we ask for is your name, your email, your phone number. And you can tell us your biggest trading challenge so we can tailor the one-on-one training for you. Hit the send button, and you will be sent all the information you need to get into 5 luxurious days of training with me in the morning. Okay. Okay. And with that, we can pass it back out to Studio A in fabulous Phoenix, Arizona, overlooking South Mountain, America's largest city park. Dwayne, if you are ready. And okay.
Okay.
Gold.
Recap of the recap.
Today, it took 17 minutes and 2 trades to get to the goal for the day. At that point, we're up $100 per contract.
17 minutes, 2 trades. That's a good bingo.
And it is.
So what else happened this morning?
Well, you and John tried to have a webinar, and for some reason, the room filled up, and it kept kicking you out, or something kept kicking you out. I don't know. I never even turned it on.
It crashed twice. Twice it popped up on the screen and said an organizer has ended the session, and I was the only organizer in there.
Yeah, I didn't even try because I don't want to take up a space. I figured you guys would fill it up. And
it was actually overflowing.
Was it? Yeah. I mean, and usually you get a message when it overflows like that. You know, you get a message that says this guy tried to log in. And
I got the pop-up that said the room's
Yep.
full. So, anyway, he's going to be here. I just talked to him. Do you see him in here yet?
I haven't looked. Hold on.
We're going to get his take on it.
No.
Okay. No.
Not yet.
Not yet.
All right. Well, he's headed our way. So the market did, in fact, stage a pretty good rally, pretty good recovery attempt last night. Let's just back up and take a look at, here's the Globex open Sunday night. We opened the week at 29 and a quarter. We had an alert, Concierge Trade Alert to be short, 29.25. We printed an exit signal right here at 29.01. That's a 24-point drop right there. The S&P pays $50 per point. So that's a $1,000 per contract move. More than that. Tuesday, I'll use the calculator. 24 times 50. $1,200, there we go. So that's a $1,200 per contract move from the entry to the exit signal. We did not pull back to the trigger. However, we did get a re-entry, and let me show you exactly what that looks like. Those of you that were in the live training room this morning, those of you that are in there each and every day, you see this over and over on the 4-tick range chart. But everything that we do with the alerts, with the discretionary trading, is all grounded, built on all of the rules, everything that you see in the live training room each day, with a couple of nuances. One being, of course, bigger targets, more risk. But here, price tried to pull back to the BBC. There was so much downward momentum, it couldn't quite get there. Didn't miss it by much. So we draw a trend line across the bottom, same way you see Mike do it on a 4-tick range. Close below the trend line that he drew, that I drew. I drew this one. And then that little candle right there opened at 28.94. And here we go again. Bearish cross, price pulls away. Price pulls back to physically touch, but it couldn't quite physically touch. So we draw the trend line, and then a close below the trend line signals us to enter the open of the next candle, and that dropped to the next exit signal, which you can see right here. When the black step line crosses over the red and falling CFMA1 on a short trade, the first green candle that closes above the step line, that is in fact the exit signal. So from 28.94 to 28.44, that's going to be 50 points. That's going to be $2,500 per contract traded from the re-entry signal given on the chart via the indicators to the exit signal that printed on the chart, 28.44 and a quarter. We continued a bit lower. Here's the Globex open right here. We continued down as we headed into the Asian session, and then about 8:30 Eastern, markets found support. We got back up to the BBC. We were all waiting with bated breath, whatever that means. I wouldn't want my breath to smell like bait, but anyway. We were waiting to see if we were going to get another leg to the downside. When we finally pulled back to touch, we discussed this as it was happening. If we close on the other side of the BBC, then the whole dynamic changes, the narrative changes. Bullish cross, price pulled away, price pulled back to physically touch, up close. We didn't go a lot higher after that, 28.56 up to about 73. And as we pulled back into the BBC here, heading into the London close, I thought this is where the market would give way. It hasn't yet. It's holding on pretty good. But we're going to watch this, and I think during the course of the show today, we'll get a pretty clear indication as to whether or not we're going to continue this rally that began last night, or if we're going to break down and continue what began really Sunday night. Let's put some fibs on here, take a look. The Globex open. So the Globex open to the low put in yesterday, a 62% Fibonacci retracement. Now that's on a 30-minute chart. Let's look at the daily. On the daily, we have a swing low back June 3rd, swing high July 26th. From the swing low to the swing high, we've pulled back to a 62% Fibonacci retracement. So we have a 62% retracement on the daily and a reverse 62 on the 30-minute. So we got a real battle going here. Who will be the victor? Well, I'll tell you, ultimately the buyers will be the victor. I'm not saying we won't go lower. I think we very well could. And I think John's gone to the other side of the fence. I think he thinks we're going to go higher from here. One of us will be right, but we don't deal in right and wrong. We just interpret what the chart tells us, and then we take action as the market begins the move. Not before it. We move with the market. So we're going to see what happens during the course of the show. I think we'll get some clear direction. Give me one moment. I'll be right back. I got to round him up. I don't have a lot of time today, but I want to get all your questions answered, and I want to make sure John gets a chance to state his thoughts on what happened yesterday and what may be coming in the next few weeks. Give me a second. I'll be right back.
Okay. Well, while Dwayne is doing that, I just want to say that in these huge moves like this, there is so much opportunity for us. You know, these last few days, you can see that, I mean, we're averaging $267 a day after starting out the month with $10. You can see that there is a ton of opportunity in the smaller time frame. You know, they're talking about big picture stuff, and that's great. And you can have more than one account, so you can do big picture and small picture. But the stuff that I'm doing in the room in the morning is definitely smaller picture. But I do look at the big picture. I mean, that's the first thing I do every morning, is look at the big picture and see how the markets are trending and if they're trending, and then just work from there. You know, obviously there's, you know, a bunch of downward movement here on the daily chart, obviously. But that last green candle, and that's today, and there's upward movement on that chart. And so, you know, I went through it all, and I showed you all the movement that there was and all the opportunities that there were. And yeah, where Dwayne just drew that arrow right there, that's probably where price is going to go. The most likely place for it to go is going to be right up there. And what is it going to do then? Well, I don't know. We don't know what the market's going to do next. But we'll be ready for it when it does happen. All right, Dwayne, if you are back.
Yeah, we pointed this area out last week where we got the bullish cross back on June 13th. As price started to come down, that is a logical spot for the market to find support. And it did. Question is this going to be enough? Did the market sell off enough? Do we go, because once we take out the 62, there's another fib in here. It's one I don't really use. I think because the guy that taught me fibs, he didn't use it, so therefore I didn't use it. But you got a lot of space here, a lot of room to run. Could we go all the way back to challenge the low of June 3rd? We could.
100%
Wouldn't be that big of a deal, that big of an issue. Let's take a look at some of the other markets. The Dow. Now, look at what the S&P looks like on the 30-minute. Go to the Dow. It's like a carbon copy. It's not always that perfect, but by and large, all of the indices do tend to move together in the same direction. Every now one of them will stray, head the other way. The S&P and the Dow have a 10-to-1 relationship that I've watched since 2005. Last couple of weeks, the Dow and the S&P seem to uncouple, really for the first time since I've been watching futures. They seem to be back in sync now, and when I say a 10-to-1 ratio, at the end of the day when you're driving home, if you hear the guy on the radio say the S&P was up 10 points today, then you can just know that the Dow was up roughly 100. If you hear the guy on the radio say the Dow lost 200 points today, well, you can just know that the S&P lost somewhere around 20. Moving on to the Russell. Not exactly the same look, but pretty close. Pretty close. The bullish cross came in around midnight on the Russell. And a little later, about 1 a.m. Eastern on the S&P. About the same time on the Dow. Here's the NQ. And the Globex open Sunday night, right there, that red candle. 6 p.m. Eastern on Sunday night. That's when we go to work, not 9:30 a.m. Monday morning. Sunday night, 6 p.m. Eastern. Global markets are moving, and most of the markets that we follow have ample volume to support whatever type of trading you want to do. On the NQ, we had an alert to consider being short the NQ 76.70. There's the initial drop. There's the exit signal from 76.70 to the exit signal at 75.96. Let's just call it 7,600. That's a 70-point move. At $20 per point, it's $1,400 per contract traded. Just like I showed you on the S&P, price tried to pull back, didn't quite make it. Draw a little trend line, close below the trend line, enter on the open of the next candle. This is a 30-minute chart, but we trade it just like we would trade the 4-tick range chart when this set of circumstances presents itself. And then off we go. Exit signal came in on that second entry right there, and the close of that candle 74.22, and the re-entry was 75.71. Can you do that math for me, Michael?
74.22 to 75.71.
75.71 minus
75.71 minus 74.22. That is 149.
149. Okay.
Yes.
I'll change that. I'll shave a point. Now, does anyone have any questions on this? Looks real simple after the fact. This is a historic chart. Anyone can look like a genius with a historic chart. I'm not trying to look like a genius. I'm just trying to point out the simplicity of the methodology. And
John
there's
is-
John.
Yeah, I'll open them up.
Okay, thanks, Michael.
Got it. There's John.
Hey, John. Welcome to the show.
Sorry we couldn't get the earlier show
Well,
on as well.
the room was packed. We were at capacity, so I'm just going to consider we broke the internet. But hey, we're back. We're in the bigger room now. We can hold everybody. And everyone's very anxious to hear what you have to say about what we saw in the markets yesterday and where we're going from here.
Well, one of the things we said yesterday, two things we said, we'd probably expect about, another 50% down of what we had yesterday. That's kind of what happened, except the Dow was a bit more, is down about 500 overnight. That was the kind of point that we would have been looking to buy. And the second thing was, I said three things. That was the first thing. I also said the market could rally strongly overnight. I didn't rule that out. And the third thing was that the market, I said, if it's a carbon copy of 87, we're probably going to get a buying opportunity between 10 and 11 on Tuesday. Well, the market jumped the gun on us by bottoming out at about 8 o'clock last night, and really had the kind of rally that nobody saw coming. And here we are at a positive on the day, pretty much up 200 on the Dow. I mean, we're up. We've had one of the biggest intranight reversals ever after being down 500 or so, or even 600 during the night, and now we're up, and we were up almost 300 this morning, or 250 or something like that. So, we had almost an 800 point rally, which is a fantastic rally. That's kind of what we were expecting, but because of the Chinese yuan shenanigans and a few other things. Look, I did also say that there could be an intervention by all the central banks, and it appears that there was something like that happened last night. And very often when you get a really bad sell off like we had yesterday, you do get these miracle rallies that happen overnight, because it's a lot easier to manipulate the markets higher. People cover the shorts and start a rally. And normally this is not, if you could put up the the cash S&P, the one that doesn't trade during the night.
Yeah, I got it right here, John. Hang on.
And we can get a better sense of what that looks like.
Here we go.
And even, you can't rule out another kind of a rally here, even though it looks like it might roll over. Doesn't seem to be. I think it would have rolled over by now if it was going to go lower. But you can see that picture is completely different, really, from what we're looking at a minute ago, where you've got the history of the last 12 hours or so, right. Or 15, 20, 18 hours. This thing here looks a lot heavier. And if we could have a 2-day rally here, and then we could go, we might have another bad down week.
And it's worth pointing out that the futures follow the cash index, not the other way around. Mm-hmm. And while the futures chart did look pretty bullish there, this is a daily chart of the cash market, cash index, and I think we could still see lower prices.
Well, look, let's just look at this in the most bullish scenario right now could be that, we after the January bottom, or the December bottom, we definitely had a very bullish impulse wave to the upside. It could be a first of a fifth wave, right? And
did you say December, John?
Yeah, here, that whole first wave, we've had a three-wave pullback for the A wave. We had a B wave, which went to a new high, is very bullish indeed, and this is the C wave, which is always the one that tends to be a near vertical move down or a vertical move up when it's an upward C wave. So what you have to look for is, if this market is going to go higher, and the odds are fairly high that it could, we can maybe get down to 2,800. In other words, if we take, let's see, we went from 2950 to 20, so a 200 point down move on the S&P take us down to about 2,800. So a little bit further, and then if we hold 2800 and start going up vertically, you could actually go into a third wave to the upside, which would be the third of a fifth wave.
Now that 2800, John, if you look over here, that was a swing high back in October. As we headed into the worst December.
It would be a logical place
1832.
to get support. It would be a very good place to get support.
Perfect spot.
And it could, and obviously, if you suddenly had a very powerful up move, and you get back up to 29, and then you gap up through, because if this thing is as bullish as it could be, you could have, in other words, this is the run for the roses. This would be a third wave that would take us up to 3,300 on the S&P. And potentially set up for a fifth wave here, over the next year or two going into the 2020 election. I think that's a kind of a logical kind of an explanation of where we could go with this market. And so definitely we have to look at, because, and another thing is, we were talking about August and what its impact was in 87. There was an initial crack off the August high that scared the heck out of everybody. Right. And then within a very short period of time, the market started rebounding. And then the real downturn came in October. And I think the same thing could happen. If we suddenly made a nominal new high off this low, if we had some kind of a really strong rally into September, which is still potentially on the cards, and then that rally fails, then you could run into big trouble in October. Or this could be the beginning, forget about comparing 87 and just say that perhaps this could be because I think the Chinese got a real wake-up call yesterday with their because their stocks are not up that much today. Most of the Chinese indices are only marginally higher, kind of look like they're going to go lower. And I mean, they're making new 52-week lows. And listen, I think this whole Chinese, obviously they've been building infrastructure at a phenomenal pace, and all the rail lines and everything. The high-speed rail infrastructure in China is unbelievable. I mean, they got more track than the whole rest of the world put together, and they've laid it in about 15 years. So a lot of that infrastructure has been done, and their economy. I mean, that chart we looked at yesterday tells a big story. I mean, listen, do you think if the economy was growing, if the economy was growing at 7% in the U.S., where would the stock market be? It'd probably be at 35,000 or 40,000, don't you think?
I think so, John.
So, if the economy is growing at the so-called, they've stuck to this 7% thing for a long time, it's probably a whole lot of hogwash. And maybe the economy's been underperforming in China for some time, but not because of the population there, and just because, I mean, how do you get so many billionaires being created in China in the last 20 years? Because if you sell a product and you can sell it to 1.5 billion people, you're going to get rich pretty quick. And there's probably 500 or so billionaires who have got those kinds of lock on a lot of Chinese markets, and that's and definitely is.
Well, they've kind of had a free ride too off all of our intellectual property.
Right, as well, and then the other thing is
over us with that.
Yeah, in spite of China being an export-dependent market, there is a lot of internal growth within the economy that even if they get more tariffs, will at least keep the economy rolling along in China without the exports that they are used to. And they've still got the rest of the world where they're not getting tariffed. But Kudlow was on this morning, and the market did rally while he was talking, and he reiterated the point that Trump's ultimate, and this is a no-brainer really, his ultimate goal is a tariff-free world.
How is that possible?
Well, I think it could happen. I think that this business of a subsidy-free world, a tariff-free world, and I forget the other component, but it's, there's sort of a trifecta of freedom, free exchange, and free trading. And I think that's the way the world has to go, because the quicker we get to that situation, the better. I mean, it's kind of like Europe. I've told this story before. When I was growing up in Ireland, if you wanted to buy a Mercedes back in those days, you had to pay double, what a car cost in Germany. That doesn't work anymore now, because you can order your car from Germany if you want. If you're in Ireland, or somebody's going to sell you a Mercedes for the same price in Ireland, or even a discount. So, the European community has definitely made it a level playing field. And the same thing has happened, in a lot of sense with Latin America. There was a time when you paid 2, 3, 4, 5 times the cost of a car in the U.S. back in Latin America. These days, they're still probably a premium south of the border, but they're a lot more. The price is a lot more similar than uniform across the whole of the Americas today. So that's definitely.
Mercedes is not the same car it was when I got my first Mercedes. There was a timeless elegance to the body style. It never, if you pulled up next to a Mercedes at the red light, you'd be hard pressed to tell what year it was, because from year to year, the body style just did not change very much. So I'm sorry to see that aspect of it has gone away. It's still, I believe, the best engineered car in the world.
Yeah, well, look, they're unbeatable in Formula One today. As a matter of fact, there was a phenomenal Formula One race on Sunday at the Hungarian Grand Prix. I mean, it was probably the best race ever. It was just an amazing race. Hamilton was third on the pole, and he got into second place and was giving the leader, Verstappen, a run for his money for most of the track. And he decided to pit a second time, which is, I mean, he was really no more than a second or two behind the leader for most of the race. But anyway, they decided to pit him, and he changed the tires, and the other guy's tires were shot, and he was winning about a second per lap. So it was a real race to see who would win, whether Hamilton could pull ahead and lead the race. He won by like 20 seconds or something. It was just, I mean, possibly one of the biggest winning margins ever. And it was just an incredible race. I mean, nobody saw that coming. And he's won 47 since 2015. I think he's won 48.
In 4 years?
Yeah, 48 races. And he's won more races than all the other drivers put together. The others, I think they won 45, and he's running 47 or 48.
So what do you think the secret is in his sauce?
He's just a driven guy. He's just amazing. He's a prodigy when it comes to auto racing, and he's unless something happens to him, God forbid, he's going to win the 6th World Championship and 3rd in a row. No, 6th World Championship. I think he's got 2, and if he can do the 7th, then he's going to equal Schumacher, and he's got a chance of winning 8. Because he's going to stick at it for another 5 years. So, and Mercedes is doing an unbelievable job. They've really. I mean, Mercedes, it wasn't a walk in the park. The first few years, they didn't really go, they were the underperformers. They weren't going anywhere. And Schumacher, before his accident, was driving for Mercedes, and it must have been pretty frustrating for him because he wasn't winning any races like he used to. So when Hamilton made the switch just at the right time, and ever since then it's been unbelievable. And now they're trying to get Verstappen to come over from Red Bull to Mercedes. So, and this Verstappen is really he's kind of like the new Hamilton. So the Mercedes team, if they can get him on board, they're going to have look, Bottas is a pretty good driver. He's beaten Hamilton a few times this year. So he's no slouch either. But, Verstappen may have the edge, and he could give Hamilton a run for his money in Mercedes as well. So it's going to be interesting to see how it plays out. But Mercedes, I mean, look, the Mercedes cars these days, some of the new cars are just phenomenal. And
don't get me wrong, I still love them. I just miss that that one thing that they had that no one else did. Yeah, I don't have any other word for it than timeless elegance. It was a Mercedes, and when you sat in it, when you touched it, when you felt it, and that still exists. I mean, just closing the door, that sound that it made was like, no other vehicle.
Sure. Actually, going back to the markets for a second here, Dwayne, I'm noticing that the VIXs are starting to go back to the highs, and the TVIX and the UVXY.
Let me bring
and
those up.
The market is appears to be turning down, getting close to going negative on a couple of the indices. So
here's the TVIX.
Yeah, it's got to get past this 23. If it gets past there, it's and that the way it opened lower this morning and has gone back up is pretty bullish. And I actually think that thing could go to 30. It tends to spike when the market's making a real bottom. So we have, and that would, look, it might go to 25 or so. One of the things that's kind of a little different this time with the VIX is this downturn. The VIX hasn't really. It took a while to get going, which is when the VIX doesn't have conviction to go higher, that usually means the market might rally further. So it's still a bit of a toss-up as to which way this market will go this afternoon. But the mid-cap is turning down more than the rest of the market. That's not a very good sign. And the European markets are still pretty. Hang on a second. Yeah, the European markets actually are underperforming very badly against the U.S. The DAX is giving up most of the close.
At the close today, the FTSE was down 52, the DAX was down 90, and the CAC was down 7.
Yeah.
Nothing big, but definitely red, and all of Asia closed red as well. Nikkei down 134, Shanghai down 43, the Hang Seng down 175.
Yeah. So once again, the U.S. is the strongest market, but it's definitely it's vulnerable to a downturn here, and what can usually happen when you get a big rally overnight, the market could go down, could go negative 50 on the Nasdaq or something like that, and then could rally, could just turn on a dime and go back up. By the way, the dollar, there's starting some talk. Yeah, there's some talk starting to emanate about, really crushing the dollar, or getting the dollar to break down, which I think would be very bullish for all the markets, and would probably be a huge winning formula for Trump. Because you saw when we looked at that EEM chart yesterday, you could see that incredible rally in the overseas markets when the dollar was weak in the first decade.
So how is it, John, that China is currency manipulators and we're not with our quantitative easing?
Well, our problem is the dollar is too strong, and the quantitative easing has actually been bullish for the dollar.
No, I'm just saying we're accusing China of manipulating their currency. Well, what do we do?
Well, they definitely did that last night, because they
did. I agree.
Effectively devalued it. Yeah.
Our way of doing it might be a little more sophisticated, but I think at the end of the day,
I don't think they've got any choice. And look, somebody sent me a thing about. I'll send it over to you later. Somebody sent me a thing that they're actually starting to trade in other currencies. Like the ruble, and India's trading in rubles, I think, and they're trading now in the euro. I think the euro is 40% of transactions are being done in euros now. So the dollar could be close to some sort of a sudden breakdown in the coming few months. And also, this Kyle Bass, who's a very sharp guy, was on CNBC yesterday, and he basically made a case that China is kind of, you remember the Asian market crash that came in 1998, when all the currencies suddenly devalued and lost their value. He's making the case that this, and by the way, it's kind of 20-year anniversary, like, so it makes sense. And, there was a sense that China was, or the Korea was invincible because it had all this dollar cash. And when it turned out that they used that cash to prop up the banks, the whole system fell apart and all the Asian currencies crashed. And it kind of looks like as he was making the case, he was saying this could be happening in China, where they've used all their cash to sort of bail out the banks and support the banks from going under. And all of a sudden, he said they're dollar desperate. So these tariffs are really killing. They have the potential to really cause problems for the Chinese because they won't have dollars. Now, we talked about the nightmare scenario, which I think it's going to happen one day. It's virtually inevitable, and that is, where and it's a sort of three-stage. There's where we are today, which is, everything looks cool. The U.S. is leading the world. There's nothing which can shove us from the spot we're in. But these rate cuts that they just started could be consequential in the future. They could maybe overheat the economy. They could cause the dollar to drop in the months ahead. And what you have to realize is, once this dollar, if the dollar breaks down at sort of 95, 94, in the low 90s, it becomes a self-fulfilling kind of a deal, and it might be very difficult to turn around. So, we could go all the way down to 80. What's going to happen if the dollar gets down to those levels? U.S. exports would probably boom. It would be very good. It would help turn the deficit, would improve. You'd have probably a short-term improvement in the economic performance. Probably the GDP could run 4, 5, 6%, maybe even 7%, and for a while. And what's that going to do? It's going to cause interest rates to rise, because when the dollar goes down, the mechanism is that interest rates rise to defend the currency. If you don't believe me, have a look at the Argentinian rates. And when the Mexican peso crashed, the same thing happened. Rates rise dramatically. And the problem with that is, right now it costs $350 billion to pay for the debt. In a few years' time, it's going to cost $750 billion. But what happens if interest rates rise and the cost of maintaining the debt suddenly surges to $1 trillion or maybe $2 trillion? All of a sudden, the U.S. doesn't have, the $3 trillion it needs to run the economy, right, or $3 or $4 trillion, and that would cause absolute panic around the world. And ultimately, China, that holds more than $1 trillion in bonds. I mean, I've always imagined the day when China, the leader just says, just get me out, get out, because the bonds are going to be plunging. So China's net worth in right now, they're in paradise because the bonds are making new highs. So they're happy with the bonds going higher, but at some point they got to sell. And when they sell, if they suddenly sell in a panic, that would be the scenario. That would really be a scenario in which gold could go to 8,750. I mean, because you can imagine, China decides to sell. I mean, Russia, all the foreign holders just decide to get out of U.S. bonds.
Look at this daily chart on bonds, John.
Yeah, it could spike interest rates to 20% or something of that nature. Now, look, it's the sort of thing that I foresee could cause the Dow to drop down to 10,000 or lower in 2022 or 3 or 4. And you know what? We'll get past it. We got past the last time. Did the world change that radically when gold went to 850 or 875 in 1980? No. A couple of years later, we started the biggest boom ever. So I think, the debt, this ultimately, the dollar crashing is a great way to monetize the debt, because if the debt's 23 trillion right now, 23.5 trillion, or going on 24, if the dollar gets cut in half, the debt is really, in the future, debt is only half of that, right? Because it becomes more manageable. So it's, I think that we're going down that road sometime in the next few years. It's virtually inevitable.
Now, you were just talking about
and the reason, one of the reasons is if they rev up the economy too much. Look, the dollar going down. Why do you think there's no inflation in the U.S.? Because the dollar is strong, and while the dollar is strong, inflation is under control. But as soon as the dollar goes down, we remember in the 2011, we had 4 or 5% inflation, but that was enough to send gold up to 1900. If the dollar drops, if they overstimulate the economy right now, and we have a real surge in the next couple of years, which is probably likely, especially with the infrastructure bill, it may.
You give a dance, someday you got to pay the band. We keep putting off paying the band. Pretty soon they're going to just stop playing. You mentioned Kyle Bass a minute ago. As part of I'm a quote from this article, as part of the trade war, the U.S. this week described China as a currency manipulator. The accusation came after Beijing significantly changed its policy of supporting the yuan, allowing it to slide against the dollar. This, in turn, allowed China an unfair competitive advantage in global trade. According to Mnuchin, China retaliated by warning the U.S. was deliberately destroying international order. For the average investor, an alternative thus makes perfect sense. Kyle Bass said if you're in Asia and China, you're in a closed currency system, or if you're in Hong Kong and you can't seem to get a big conversion of Hong Kong dollars to U.S. dollars, what are you going to buy? Well, his answer is right up here on the screen. Bitcoin knocking on the door of 12 grand. I believe we've had our last pullback to 10, and I consider that a hold. And I think there's some calling for 15,000 by the end of the month. I certainly think we're going to see the all-time historic highs or better by the end of the year.
It looks that way. And look, he said something else yesterday, which is really the clincher. The Chinese, you look, it's been it's like an earth tremor or earthquake in the way that gold has gone from being, relatively, subdued, sideways trading and, deal to suddenly bursting to life and going up pretty dramatically. And the question is why, and who is buying gold, and why are they buying it? And the reason is the smart money like Kyle Bass are seeing the writing on the wall. There's a potential, you got Deutsche Bank in all kinds of trouble, and you've got that could pull the system down. You've got these Chinese banks. There's about 20 of them that haven't reported since 2018. So you can consider them to be all, underwater. Right. And so there is a really, out of nowhere could come a system, a blow up. I mean, look, you saw what happened from, when things got overheated in the real estate market in the first decade. This happened in 1994 in Mexico. At that time, Telmex was the widest held stock in the world. Everything looked fantastic. Nothing could go wrong. And then the next thing you know, there was an implosion, and the country had to be bailed out. And I remember thinking back then, Jesus, what if this ever happens in the U.S., who's going to bail the U.S. out? Well, ultimately, the Fed ended up bailing us out. Right now, China is probably in the same, because China's real estate is very symptomatic of the same thing that happened into the U.S. in the last decade. So, and clearly, its stock market's looking very, very bad, and its whole economy could be unraveling in a big way. So, that's
according to Kyle, whoever's buying gold, the Chinese are buying Bitcoin. He ended the interview saying humanity has now created a non-sovereign, highly secure mechanism to store value that can exist anywhere the internet exists.
Exactly. Look, it's a way to move money anywhere in the world, and that's what the Chinese need to do because they're being restricted from sending money overseas and things like that. So the two beneficiaries are Bitcoin and gold.
A couple questions for you from the audience, John. I still want to go back to the currency manipulation and the quantitative easing. But from the audience, Mike asks, John, with the nugget big move up, what do you think is going to happen with our favorite gold stock? And then Frederick also has a similar question. The Dow and the S&P, you said, is close to a 10-to-1 relationship. That's what I said earlier in the show, and that is true. Would you ask John what the gold to silver relationship is? Silver does not seem to be moving the way gold is. Your thoughts on that?
Well, it's improved. I mean, we've gone from an all-time high of 93 or so down to somewhere in the 80s, I think. And it just in the last few days, the silver's, it kind of led the way higher off the 14 level. It's now 16 and a half almost. But the gold, actually the gold situation to me looks like it's close to, it's close to going through 1500, and perhaps the silver is really only 20 cents away from breaking out to a new high. And I think when that happens, you're going to see a run to $18.50, and that should see gold run to about 17, potentially 17, maybe 18. I don't think it's going to go to 19.5 just yet, but I think ultimately it can get up there. So the JNUG, I mean, we were hitting up in the mid 90s almost at the highs on the JNUG. Listen, the minute this thing, when these stocks get up towards 100, they generally, when they go through 100, it's kind of like that. Remember that stock I said it's going to go to 120? Honestly, I think JNUG could go to about 130 from here. I was looking at the GDX yesterday, and it looks like the GDX could go up another $5 or $10 from here, which would be the equivalent of the JNUG. I think the Nugget can go to about 50. If the Nugget gets over 50, then the Nugget could be headed for 100, and the JNUG could be headed for 200. So, as far as small mining stocks are concerned, they're starting. Some of them are, held back for one reason or another. But as far as Santa Fe is concerned, look, I should preface this by saying stocks that gold companies or gold stocks that start mining ore generally tend to go up about tenfold in the first year of operations. As from the previous releases, the Santa Fe announced it's ramping up production. It's very close to shipping ore. There's probably only maybe a week or two more before they actually ship ore and begin earning revenues, and those revenues could be considerable, especially given the fact that gold has rallied as much as it has. And the reason why gold stocks go up tenfold is they start out maybe 50 tons a day, 100, and then they work up to 100 tons a day, and then they go to 150, 200 tons a day. When you start out at, if you're doing, whether it's $30,000 a day, something like that, and then next thing you know, you're doing 60,000, next thing you know, you're doing 90, and then within a year, you're doing 120,000 a day. Obviously, it's going to have a big impact on the company and the value. If you start doing 200,000 a day, that's $1 million a week. $1 million a week, you're sort of getting up into the mid-tier gold producing era. And if somebody wants to do their due diligence on this company, they're going to probably come to that sort of conclusion based on what's been announced so far. And let me give you an example. If let's just say that they do 35,000 a day. If gold goes to 1950, that's going to go to 50,000 a day. That's a pretty big jump. and that's all net to the bottom line. That's because it doesn't matter whether it's, whatever the company's costs are, maybe 20,000 a day, so they're making 15 grand a day or whatever, or maybe less. If it suddenly goes to 50 to 1900 and 50,000 a day, all of a sudden the company's making 30,000 a day net. So then that really starts to make a big difference. And it goes to 100 tons a day. Next thing you're doing 100,000 a day. It goes to 150, you're doing 150,000 a day, and then you go to 200 tons a day. These mines can produce, to some mines. There's a couple of mines in that region that can do 400 tons a day. That's I'm not telling you anything you shouldn't know. That's if you do your due diligence, that's what they can produce.
Right.
So if we do 200 tons a day, it's already. They said they're going to bring another mine into production within a few months, and then a third mine into production. So if you get three mines doing even 200 tons a day in two, and just 100 tons a day in another, all of a sudden you're doing 500 tons a day. Do the math on that. That'd be close to 2 million a week. So that's 100 million a year. Any junior that's the company acquired 11 gold and silver mines at the end of the year. First one's already in production, and it's on the point of shipping, in just about 7 months. That's a pretty phenomenal, or 7 or 8 months. It's a pretty phenomenal, lead time from just starting production, from getting the mine prepared. Look, putting a mine into production is a very complex, there's a lot of things that have to be done in order to, because it's not, once the production starts, you have to maintain it, you have to maintain the rate of production, and you have to, at the same time, develop new ore so you can boost production. And that's a time-consuming process. But, over 6 to 9 months, it's not inconceivable the company could go from 50 tons a day to 200 tons a day. So, look, I'm a very large shareholder in the company, and I've done a lot of work for the company, which has also increased my shareholdings.
That remark.
So say that again, sorry?
I said, I resemble that remark.
Thank you. Well, no, thanks for all your help doing it. But look, I think, personally for me, I'm that's my only gold stock that I'm in, and I'm all in on Santa Fe because from my perspective, I see more upside on this stock than just about any other gold miner out there. That's my opinion. You got to figure it out yourself. But I'm just going on. If you connect the dots and you look at it could with 11 mines, they're all fully permitted. They're ready to go into production one after another. If you're running this company, what would you do? You would want to get all of those mines into production over the next few years as quickly as possible, especially with the rising price of gold. It's a perfect scenario. And there are three things that affect the performance of these mining companies. Number one is the grade. This is a very high grade area. That's why the company went there in the first place. They've been incredibly fortunate to be able to acquire these mines at a perfect time right before the gold price went up on very good terms. Look, the company's spent probably $5-6 million acquiring these mines. If you really investigate what these mines could be worth today, you'd have a hard time believing the value, what the company's done in terms of increasing the value of its assets. And that's the beauty of gold mining. If you go in and buy mines when nobody wants them, and then you have a situation like this where suddenly the gold price takes off and these mines become incredibly valuable very quickly. That's been the strategy all along. And if this becomes, the mother of all bull markets in gold, and gold goes to forget about 8,000, just $3,000, which I think is going to happen in the next few years. Even 2,000, it's going to make a dramatic. It's going to have a massive impact on the valuation of these companies. So, I mean, these are the sort of things that can. I mean, we've been through a few of these gold. This company went from 7 cents to $2 in the past, and I think deja vu is a very realistic possibility. It may, but I think the company today is in 5 times, 10 times better shape today in terms of its assets than it was back then. So and having a mine ready to ramp up production to substantial levels is something that is not, you just don't, timing wise and everything else, just doesn't come along every day. So, for those who can accept look, the beautiful thing about buying gold at this stage, or buying any junior mining stock, it's like buying a long-term call option on the price of gold. If the world blows up, you've got, the value, your value is going to go up in your holdings. And this looks like the beginning of a long-term trend. So, this has been something that's been thought out and planned for a long time, and it's coming together very, very well. The company is very well managed. You've got a very, very wealthy guy running the company. He is a chairman. He's built up a phenomenal organization, and he's got, he's 1,000% behind the company.
Yeah, I got one more question for you. If you need to get that call. You need to get it. Get it.
I'm right. Thanks. So, that's. I think it's pretty exciting, and it's very humbling to see the way this thing is unfolding, because pretty much. Look, the best thing that can ever happen with any company is for it to exceed your expectations. And because when a company is exceeding your expectations, that's best it can ever be. And when the company is making announcements and making acquisitions and things that nobody saw coming, I mean, that's kind of like as good as it gets. So the potential, as long as most of the calculations, original calculations were done at 12.35. So we're $250 above that price already. That's a huge thing. I mean, look, just in the last week or so, the potential revenue per day has gone up by, call it per month. I mean, I think the potential revenues have gone up by about 60,000 a month, maybe 100,000 a month, just with this increase in gold. So, I mean, that's $1 million a year. So that's kind of an idea of what the price of gold increasing. So it's the grades, the price of gold, and the rate of production is a very powerful multiplier. When all of those three things are going up, you're dealing with an exponential multiplier. So on that note, just do your homework, and you'll really and look, this company, when it breaks out, and it probably will pretty soon, what these companies go from sleepers or slumberers to, all of a sudden people start burning the midnight oil. You get these accountants and number crunchers burning the midnight oil, trying to figure out how valuable these companies are. With all the potential assets they have in the ground. And the company has 5 silver mines, got 148 mining claims, 42 potential mines and mine sites. Okay, 148 mining claims. That's pretty unique in itself. In just less than 2.5 years, it's put that portfolio together. It's got 11 permitted mines ready to go, and 5 silver mines. And the silver mines are potentially unbelievably valuable. I mean, enormously valuable. As probably, there's going to be some results coming out on these tests very soon. And I think when that happens, the world's going to wake up to this story, and probably going to carry it a lot higher. So that's my take.
There was a question from Frederick about the price of the iShares ETF. Why is it priced at 1538 if silver's over 16? Frederick, it's those prices for GLD and SLV. Those are share prices. They don't reflect the actual price of silver or gold.
Right. Look, right. Can you pull up USLV, Dwayne? Let's have a look at that one. Yeah, this there may be just the way the S&P is turning higher here, and we did say it looks like it could break out. I even said that to you when
We're ready to dance
before I came
whichever
up this
way it
morning.
goes.
Yeah, look at this stock. I mean, boy, look at the way it's risen right off that low. And look at, this is another one that's probably headed north of 100 pretty soon. If it breaks the high 80s, it could really run up. Can you squeeze it up a bit, Ryan?
Sure.
Yeah, it looks very, look, it could go all the way right up to that 100, 110 level, 120 maybe. And it's just kind of itching to break out this stock. And when that happens, I think you're going to see a very big move in silver.
Good gracious.
Yeah, I mean, look at how high this thing.
How high did this thing go?
Yeah.
40
Look at the base. Look at the base on it.
I've never seen a base quite like that. I don't think.
Yeah.
5 years.
That's what's going to power this bull market. I mean, it could be epic. It could be really epic. And I think it's. I mean, just. By the way, I meant to mention this. When the silver, remember what the gold has had to get through to get to 1480. I mean, when we were down in the 1200s, right? What were they doing? They were slamming this gold in after hours. Somebody hit the gold market with 7 billion futures, 7 billion worth of futures to try and push it down. They were trying to get it to break that 1280 level, somewhere like that, 1270, 1280. Guess what? It backfired on them. How much money did they lost if they didn't get out in reverse? That's what's going on with this thing. They're in a, this is exactly what I said is a replica of the 2011 situation in gold, in the markets, when the biggest short position in history, bigger than 2009, the secondary lows. What happened last year in August, September, was you had the biggest short position ever in gold and silver, ever, with all these hedge funds deciding to go short. Where are they today? If they didn't cover in reverse, they're losing a ton of money. And the thing is, the higher this stuff goes, the more pain they're in, and they're going to have to cover it sooner or later. That's what's probably going to provide the spike that's coming one of these days, when you're suddenly going to see $100 in one day or something like that. So you've got this kind of earth, it's sort of like a volcanic eruption underneath the gold market with enormous buying power. Because listen, if they're overcoming 7 billion in one day, think of the buying power required to move this market higher. And remember, the buying power is there because compared to the stock market, the gold market is minuscule in comparison. But
True.
That can change. In the two previous gold booms, the S&P, the percentage of gold stocks in the S&P rose to about 30%. So, and we're probably at 3% today, maybe even 1%. So there's tremendous upside in the next few years in the event of a gold boom of epic proportions, where you're going to see the gold sector increase its share of the S&P in a way that most people can't even fathom right now. And day after day now, you're hearing. I think Morgan Stanley said people should have up to 50% in gold. They came out and said something like that the other day.
Morgan Stanley did?
Yeah, they never said anything like that before.
Yeah, none of the big boys have ever said anything like that.
Right. So, and we're in one of those, I said this before, we're in one of those eras where the gold and the stock market probably going to go up together, and the best thing that can ever happen to gold right now is for the dollar to go down. I mean, look, if the dollar goes down to 80, I think you're going to see 2,400 gold, maybe even more, maybe even 33,000. And if the dollar goes down to 80, there's a pretty good chance it's going to go to 70 or 60. And while that's an extreme number, it's happened before. It's happened in every dollar cycle. Every down cycle in the dollar's basically lost about 50% of its value. and we're overdue for a down. We're in a down cycle right now. We're in the strongest down cycle the dollar's ever had. In other words, we're off the highs, but we're not that far off the highs. You know, we did go down about 12 or 13%. We rallied up because of the Trump economy, but maybe it's time for this dollar to, you know, when the dollar finally breaks down, gets below about 96, I think it's going to be curtains. And one feature of this dollar down cycle is generally at some stage in the cycle, there's a very rapid decline in the dollar. I mean, really, it's a feature of the dollar. You know, we had a pretty rapid decline from the 103 or 104. You know, if you go back to 2001 rather, we had the dollar index was 123. Okay, it went all the way down to the low 80s in 2009 before it started this upcycle. Where did it go in the upcycle? Well, nowhere near 123, obviously. The secondary high was 103. So the dollar is a weakening, even though it's a stronger currency than a lot of currencies in the world, it's actually a weaker deal. Look at where it was before. See that? I mean, it doesn't look that strong, even though everybody says the dollar's kind of stronger than ever. Look at where it was back in 1980.
Yeah, this thing could easily turn down.
Yeah, and by the way, look at that. Is that can you move that cursor for a second? Is it it's 1986. Okay, so you know when gold went to 875, the dollar was pretty high compared to where it is today, right?
Right. So
you know on that measure alone, gold is probably undervalued today. And by the way, if you work out the inflation level since 1980 and factor it all in, the intrinsic price of gold is probably about at least $3,500 an ounce, and it could be closer to 5,000. So there's a lot of catching up to do. And obviously, if you can see it with your own eyes, I mean, Jesus, if this dollar breaks down into the mid 90s, low 90s, it's curtains, because once it breaks that sort of about 93, that uptrend, you're probably heading for new all-time lows in the dollar. And why wouldn't you be? You know, the dollar's got more debt than any time in history.
When they finally take away Jamie Dimon's banking license, you're going to see big moves in the metals.
Yeah.
He's been sitting on those prices for too long.
Exactly.
Anything else you want to cover?
No, listen, thanks very much for the opportunity. And,
all right, John.
All right. Have a great afternoon.
Thanks very much.
Bye-bye.
You have a good afternoon, too, and I'll talk to you. Maybe I'll talk to you this afternoon.
Thanks.
All right. Okay. Back to the S&P. Eve, you had a question. Let me know if you're still here. So I'll walk you through this and make sure you understand. It says here, I see you still on the list. Could you please explain the alert this morning about the ES? Sure, it's really simple. In fact, let me do this, make it even more simple. Mike, you're talking about two different things. Your question about the Nugget and Santa Fe. One's an ETF. Has nothing to do... well, you know what? Let me answer this question, and then if you want some more explanation, I'll give it to you. The relationship between these ETFs, between gold, between silver, individual companies... See, these ETFs, they track the price of the underlying commodity. They don't track the price of individual companies. And of course, one might say, well, if the price of gold goes higher, shouldn't gold mining company stock go higher? Well, each one's a unique case. Some will, some may not, some more so than others. You really have to crunch the numbers to determine. So, Eve, let me see if you answered me. Yeah, there you are. Okay.
Yes.
Very good. So let me copy this, put it here. So this alert Eve, all it's saying is consider being short the S&P 2845 to 2843. At 2843, you look in your rearview mirror, make sure you've got the wind at your back, make sure there's some momentum on your side, and if the market allows you, stay with it till you get down to 2840. At 2840, trail if possible. We have a weekly trading zone at 2811/2812. If price had triggered on the short side, we'd be looking for price to go from 45 to 43 to 40. Now, the average swing in the S&P is 3 to 5 points. Once we go past 5 points, we're in what I call an extended move. In an extended move, you'll be able to use your chart to wait for the exit signal before you get out of the trade. Everybody likes to have a target, but even better than a target is having the chart tell you when it's time to depart. And let me just show you. Like on this alert here, to sell the S&P at 29.25. This little black line, we call it the step line because it looks like a set of stairs. When it crosses over that red and falling CFMA1, the first green candle that closes above the step line, because it's a short trade, so we're looking for the first green close above the step line after it crosses from 29.25 to 29.01 to the tick, 24-point trade. Re-entry here was at 28.94. Exit signal printed at 28.44.25. Okay. Now, if this had triggered to the downside, here's what I'd be looking for: 45 to 43 to 40. I just highlighted the price where the last bullish cross took place. That's an area for potential support in a falling market. And then the weekly trading zone below at 2811/12. We anticipate that to be good support until it isn't. I know that you're new, but over the course of the week, you'll hear a lot about the weekly trading zones. We've published those every Monday morning for our partners since December 14th of 2009. So we're coming up on our 10-year anniversary. Now, I put out another alert because price was not breaking down. We came within a point of triggering on the short side. Price is above the BBC, and when that is true, we anticipate higher prices. So that brought along alert number 2442, hedge the ES. In other words, I said this to John, whichever way the market ultimately makes up its mind, we're ready to do business. It did trigger on the long side, so we're looking at a move from 28.65 to 67 to 70, trail if possible. We got a weekly zone overhead at 80.81. That should be good resistance. Support below, resistance overhead, prices above the BBC, so we want to be long. Now, I just threw a whole lot of stuff at you. Let me know if you have any questions. You probably do. You'll hear me say the same things over and over and over all week. So towards the end of the week, the clouds will start to part and you'll go, well, gee, that's pretty simple. It really is. Our entire methodology is simple by design. There's too much complicated, convoluted, expensive stuff out there that doesn't, it occupies people. People love shiny things. And the vendors They got lots of shiny things for you. Michael and I, we once were fond of the shiny things. We had monitors and monitors filled with stuff we bought, stuff we coded. This is going back to 2006. We realized we were headed in the wrong direction. So instead of adding yet one more indicator, one more filter, one more oscillator, we just started getting rid of stuff. We pared it down to what was actually contributing to the bottom line. And I think it's been almost 7 years now since we changed one line of code in our indicators, and we've changed no rules in our methodology. So there's a thumbnail sketch, who we are, what we do, and how you read that particular alert. So let me look down here and see if you have any questions. Nobody sees what you type but myself. Michael, if he's around, I think he's gone, Valerie. And we're not here to judge, we're here to help if we can. So anytime you have a question, without hesitation, please put it in the chat box here during the live show, and then in Telegram the rest of the day. And there's someone monitoring the Telegram channel pretty much 24/7. Any other questions, Eve? All right, looks like we hit the target here on number 2442 along the S&P, 2865 to 67 to 70. Let's see what the swing high is. Swing high 69.25. So we still have 3 ticks left to go to get to the final target. Now from 65 to 70, that's 5 points. The average swing in the S&P is 3 to 5 points. Once we get past 5, that's when we start to consider that we could be in an extended move like this and like this. $28.65 is the close of the 30-minute bar. Which one? Eve, are you talking about this current candle? Well, the current candle hasn't closed yet. We've still got 19 minutes left in the life of this candle. The candle previous, that one closed at 28.6450. Yes, 28.6450 was the previous close. Now, I'm not sure you said plus 2 ticks. Is that something that you heard in the live training room this morning? Because we use a range chart in there, and with our discretionary trading and our alerts, I use primarily a 30-minute chart, but we look at it daily, 4-hour when need be. Is the entry you gave, 28.65, based on the prior closed 30-minute bar? No, it wasn't. You're very welcome.
Yeah.
Go ahead, Val.
That alert was published at 1:15 Eastern. So it wasn't dependent on the 1:30, the 1 to 1:30
actually,
bar.
I think when I published it, this candle hadn't closed yet.
That's correct.
That's what you're saying, right? Yeah. So there you go. So Eve, any other questions that you have, like I say, put them in the chat box here. In the morning in the room, put any questions you have in there. And then the rest of the day, just use Telegram. That's where I'm at most of the day. Val, anything you want to add? Because I need to get up and get out. Got to go to the good word for the day. We've covered most of the markets, S&P. We also have on the Dow, we're looking to participate in this up move, looking for resistance overhead at the weekly zone. I don't think I did the NQ or the Russell NQ. 75.05 to 75.15. we're at 75.12.50 so far. That zone overhead, this swing high is potential resistance, and then the weekly zone overhead, definitely a spot where we would anticipate good resistance until it isn't. Okay, another question. When the short entry given is way lower than the current price, so we just wait until it goes lower as the alert correct? Yes. When I put out an alert, if it's during the day session, it might trigger in 10 to 15 minutes, but it could take hours. And when I put out, like, to give you an example, we had an alert to go short. Hang on, let me grab Telegram and bring it up. We had an alert last night to go short. What chart do I have up? NQ. Okay, we'll use that. 73.31. Let me just bring it up so everybody can see it. 73.31 to 21. That has not triggered. Price has not visited 73.31. However, when it does, that will still be a valid entry. Now, if more than one session goes by, session and a half, you'll see us do this on the recap. Scroll up to last week. When you see Z's like that, that means it didn't trigger, and it didn't seem feasible to wait on it to trigger any longer because the market was busy going in the other direction. So we want to focus on that. So the three things that you'll see on the recap: thumbs up, got to the target. Z's means we wrote it off, never triggered. And the big red X, that kind of speaks for itself. It means it got stopped out. So as an example, the NQ alert last night to be short 73.31. If we fail up here, get a bearish cross, start to head lower, this will still be valid. If you see price approaching 31 and we've not put anything out contrary, it's still valid. It is rare. We have issued over the past year 2,444 alerts. And I think there's probably been fewer than 5 times that I've canceled an order. So, because if it's valid, every entry is based on prior price behavior. So there's really nothing that can happen that would invalidate the analysis that brought me to the conclusion to put the alert out to go short at 73.31. Price may not go there, that's okay. But if it does go there, I want to be short 31 to 21, and I want to try to trail it as low as it goes. And trailing, once you know you're in an extended move, becomes fairly simple because all you're waiting for is that step line to cross over. And on a short trade, a green candle. On a long trade, you're waiting for everything just like this except the opposite, looking for a red candle to print below the step line. Now, you have access to one-on-one mentoring this week on your trial. So you can get with Valerie. She'll send you a link. You pick a day and a time that's convenient for you. We can spend 45 minutes looking at charts. You can ask questions. You'll be able to see my chart, and we'll be able to talk and have a conversation because we have so many people in here now. If I opened everyone's mic, the background noise would just be insane. But when we do the one-on-one sessions, it's just you and I. So we both have an open mic. We can have a conversation. So just book that, and I'll be happy to spend some time, show you some charts, and answer any questions that you have. Okay? All right. What is godliness? What is that? We hear about it. Psalm 42:2 says, "My soul thirsts for God." What came to mind just now when I asked you what godliness means? Religious rules and regulations? I don't know if you know this, but religion, you know what that means? It's a return to bondage. Yeah, but that's another talk for another day. When you hear about godliness, do you possibly think of Christians who point fingers and say, "Thou shalt not"? If so, I mean, is it any wonder why people avoid us Christians, us believers? In fact, is godliness even possible in an age of motorway drivers and internet shoppers? Or do we need to return to slower and simpler times in order to be godly? I mean, can we have electricity and a horseless carriage and still be godly? I mean, there are some folks who say no. And you know who I'm talking about, but I'm not picking on anybody. Just a fact. Here's another fact. Godliness isn't a culture. It's an attitude of the heart. It has little to do with how a person looks, what kind of clothing they wear, what kind of car they drive. It has nothing to do with our personal preferences and the standards some of us would like to impose on others. The Bible says in 1 Samuel 16:7, people look at the outward appearance, but God looks at the heart. And no one can know the heart of man, truly know, except God. But godliness is an inside job. And the longer you think about it, the more convinced you become that a truly godly person is one whose heart is sensitive to God, who takes God and His Word seriously, and who desires to know more of Him, about Him, and spend time with Him. David cried out, "My soul thirsts for God." That's it. You can be rich or poor, young or old, urban or rural, follower or leader, active or quiet, married or single, laborer or liberal. None of that matters. What matters is having a longing to know God intimately, to obey Him, to walk with Him. So ask yourself, do I want to be godly? And if you don't like the answer, get on your knees and ask God to change your heart and your attitude. That's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell. Hey, could you insert some awkward silence here, please? Okay, thanks. Upcoming outro. I got a delay in my media player. You've heard it before, but stick around. I'll be on Telegram if you guys need me. You know how to find me. Concierge Trade Alerts will be out tonight, shortly after the Globex Open. Have a great Tuesday. Come on, outro, play. I gotta go. Here it comes.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-host, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.